And right now, folks, as we do each and every Tuesday and Thursday at 30 past the hour, we're going to talk to our man, Tim Ward. Folks, Tim's got a couple of great webinars right under the Services tab at TFNN.com. The Secret Science of Market Tops, how to identify market tops. That's $149, and 6 secret ratios every trader should know. We talk about some of these ratios when we talk to Tim, and you can reach him at his website, ord-oracle.com. There he is. Tim Ord, good afternoon.
Good afternoon. Actually, we can talk about a ratio here. We got the
Perfect.
charts up, right? All right, good. The bottom window, this is a monthly chart. I forgot to put that. Yeah, it's a monthly chart of the SPX, and the bottom window is the SPX fixed ratio on a monthly time frame. And I went back, I don't know, the chart goes back to around 2000 or 2020. And yeah, this is a monthly chart. I just want to point this out. So, in other words, as the market's going higher and higher here, making higher highs, the SPX ratio is going lower, making lower highs. That's a bearish divergence. And actually works pretty good at bottoms, too. This is the 2022 bottom. And if you notice, this the monthly SPX is actually making lower highs. So it wasn't breaking out to new highs, it's just making lower highs compared to the previous highs. But this ratio was making higher highs. So that was a bullish divergence going into the 2024 high. Actually had a divergence for several months.
Look at that.
Finally, we did pull back, and you can see a little lower high. What's interesting right now, we have not touched a high. The October high, it's kind of hard to see, but this is a volume on October right there. And that was, once you make a high volume high, normally that high volume high is tested. Either it's tested on an equal or higher volume, which will be bullish, but it's tested on 10% lighter or less volume, it's bearish. And so at a minimum, though, we haven't broke above the October high. It's kind of hard to see. But if you kind of look closely, I don't know how to really make this better.
As close as you can get, right, without doing it. Yeah, right there.
Right. We haven't touched a new high yet, but if you can kind of look over this kind of blown up window, the SPX fixed ratio is. So that's bullish. So that's on a monthly time frame. So it's, monthlies rule the day, or rule the weekly rule of the daily rule of the hours, and all the way down. So you want the monthlies. Not saying we have some gyrations over the next couple of weeks, but ultimately the monthly suggests at some point we're going to break to a new high. And that's the reason why I've been saying that October high is going to be at least touched, if not broken. The weeklies look a little bit better, kind of a same scenario. You can see the divergence going on. This was a failure here. The S&P's moved up. This ratio moved down, and the market kept going up, and finally you got another anyhow, the market did kind of move up, and this ratio moved down. And we did get a pullback. But right again here, this is a weekly chart. Right there, you can actually see a little bit better over here that we have not touched a new high yet. And you can plainly see the ratio is making a new high on the weekly time frame. So the kind of bullish, one confirms the other. So the weeklies are bullish, the monthlies are bullish. And so we should, in general, still work higher, and actually seasonality is bullish all the way into January. Well, that's next month now. So at some point we're going to test the October high, and what happens from there, we'll have to wait and see. But I think we're probably going to keep going. Everybody kind of talks about the ZBT here. This is Wag Breast Thrust Indicator. 2 weeks ago from today, we hit. It has to hit. Anyhow, to give a definition of this, this is an NYSE advance over NYSE total, and you take a 10-day average of it. To get the signal, you need a reading below 0.4, and within 10 days, you need a reading above 0.6 or at 0.6 or higher. On 2 weeks from 2 weeks from today, going back 2 weeks from today, we hit 0.38. So that's below the 0.4, and the day later, which is 2 weeks, or 2 weeks from 2 weeks ago today, a day later, that Friday, it closed up. I think it's 0.4 or 0.43 or something like that. Anyhow, started the countdown, I guess you might say. So it would be 2 weeks from 2 weeks ago. So tomorrow will be 2 weeks. And we haven't reached 0.6 yet, but there's some other, we did reach 0.58 or 59. And some people say it has to be a 10-point spread. So really 0.38 to 0.58 is a signal. And it's by definition, but if you go... So, the rules are kind of foggy a little bit, but we did have a sign of strength. Ideally, tomorrow I'd like to see a 0.6, but is it close enough? Maybe, because we went from 0.38 to 0.58 in about 5-6 days. So some people say that qualifies for the signal. And for me, I don't know. Preferably, if we can rally tomorrow and get this ratio at 0.6, would really help to confirm the breakout. But either way, do you have to have a ZBC signal to qualify for a bullish run? No, but it does help for the outcome, because you get more indicators saying you're going to be bullish, the better it is for the long term. So has ZBT been triggered? Yeah, maybe it came close. Maybe it still will. Don't know. But it's not bearish. But we haven't really qualified with a 0.6 reading yet. So we'll have to wait and see. When I made this chart today, it was 0.54. It backed off from the high a couple of days ago. So, anyhow,
I was looking at the VIX, just as when you're talking, because I'm always watching that VIX, and especially when and that is one of the ratios in that webinar, folks. Right in the services tab, that SPY VIX. And I was looking, Tim, 10 straight red candles on a daily basis on the VIX. 10 straight. Yeah. Today's the 10th one. 10 straight red candles on that VIX, going from almost 28 to 16. Pretty hard to do 10 in a row of anything, and not necessarily down, because you were jumping up sometimes, but 10 straight red candles. The VIX every single day, finishing lower than it opened for 10 straight days. Pretty remarkable.
Yeah. Yeah, I think we are going to, take out the highs. And, I guess once you get up to the October highs, I think this market's going to actually stay up. This is what they call the midterms. There's midterm election years, and usually those years are not very good. They may not be bad, but normally they underperform other years. But you got 72% of the time, the market is up every year. So if you're betting mad, sure, you want to bet the market be up. So I hear the music. So
all right, folks, stay tuned. We're going to come back. We're going to finish up the conversation with Tim Ward. And check out Tim's website, folks, ord-oracle.com. And as I mentioned, those 2 webinars, and one of those ratios, we kicked it off, that SPY VIX, 6 secret ratios. We'll come back. We'll talk some more charts with Tim. Stay tuned, folks. Welcome back, folks. We got the S&P slightly in the red right now. We got a VIX with a 15 handle. We're talking to our man, Tim Ward. All right, Tim, let's keep going. Where are we going to next?
All right, we're going to kind of just review here a little bit, but I think there's a seismic switch of investments going on, and it could last a while. We've seen this chart before. This is the I think it's a monthly. This is a monthly monthly XAU to NDX ratio. In other words,
sure,
when this ratio is rising, that means gold stocks are outperforming the NASDAQ stocks. When it's declining, NASDAQ is outperforming the gold stocks. And over since basically 2012 down to 2024, NASDAQ's outperformed the gold stocks. And we just had a kind of a seismic switch. This is the first time the RSI got up around 70 since basically 24 years ago. And that's initiation of an uptrend. That's unusual. It hadn't happened, from 2012 to 2024. It more or less stayed below 50. And this is the first time we got above. So the gold stocks or XAU really outperform the NASDAQ stocks. And so that's the start of a trend on a mega scale to the upside. And I'm thinking it's going to last 12 years because this 12-year thing matches up pretty well. I don't have the information going back further, but we'll see how it works out. One clue that this rally in the gold stocks is ending compared to what the NASDAQ stock is doing is when this ratio falls back below 50, thereabouts. So if we get down to 40 or something, that would imply that this potential 12-year cycle is not a 12-year cycle. So right now we don't have to worry about it because we're staying up. Right now it's around 64. So anyhow, I'm thinking this rally in gold stocks is going to last a while, more than a multi-month rally. I think it's a multi-year rally. And I want to point out, we've seen this chart last, actually Tuesday. This is the commodity index.
Yes.
So this is all the commodities. This is wheats, the grains, the metals, oil and gas, energy. All that stuff is in this ETF. I think it's an ETF. Yeah. And so anyhow, it really hasn't done anything since 2022, and it hasn't really done anything since 2000. Currently, it really just gone more or less sideways. It's bounced around between approximately 20 to 20. Well, actually, this is real more. Actually, around 20 to 23 kind of stayed. And look what's happening here. All of a sudden, this is William O'Neill's cup and handle. If you go back and look up William O'Neill's cup and handle pattern, it basically says you have a strong rally off of a bottom, it's an impulse wave, then the market flips sideways, and the more narrow that sideways trading range is, the more bullish that pattern becomes. And ideally, you like to have the handle, which is what this red line indicates, in other words, this sideways trading range, you want it to stay above 38.2% retracement. Ideally, you want, when it hits 25, the ideally pattern would be the thing goes vertical at 25. Well, that's almost impossible. But this thing's been going sideways since 2022 to 2025. So what's that, 3-4 years of going sideways? So either you're going to break up or break down. But since you only did a 38.2% retracement, most likely this retracement's the halfway point of the next move up. And if you do the statistics, it comes up around 40, which is basically breaking above this high back here. And it could do 45 or could do even 50, don't know. But a lot of times, the more narrow that trading range and the least it retraces compared to the recent rally, the more stronger that move is. So what that says is the commodity markets are going to come alive, I guess you might say. It's been dead for a long time. And so here's another, so that's all the commodities. So actually, I think this is a good investment. I think it's a double over the next, 12 months or better. I think it'll outperform the S&Ps. But here's another. This is USO. This is the oil fund. This is a monthly chart too. Goes back to 2010. And when this thing goes and breaks out of a trading range, it goes. Went sideways for a couple of years there, broke down. The COVID rally was this thing going up. And it's also a cup and handle here. This is a cup right here. This is a handle going sideways. Look how narrow that thing is. And it was a 38.2% retracement. And if this one goes, which basically is the same pattern, this one's going to go too. This one actually has a little bit better percentage. You're around 70 right now, give or take. If you do the statistics, you should actually test this high back here, which give or takes around 170 range. So that's over a double to the upside. If you notice this on its strength here, market had it actually, this is what that little day right there, that month right there was actually a selling climax, because if you look at that volume, the volume was double compared to the previous months. So that's a selling climax. If you have a selling climax, if right after it you have a buying climax, which we did, that suggests that stock's about ready to break out. And this is a monthly chart. So this was way back in probably June or something, and the market just kind of staggered down since June or thereabouts. Maybe it was July, but you had a sign of strength to the upside. And if you can see right there, that's a huge sign of strength. So once you start testing previous highs and higher volume, at some point you're going to break above those highs, and that's what you want to have. That's the reason why I'm a little more bullish on USO than GSG. And currently we're kind of just consolidating. Volumes lighter on the pullback than compared to the rally up. So we're going to have a breakout probably the same time as this GSG is going to break out. And I think we're going to go right up to top of this trading range back in here, and we may get a consolidation before we actually break higher. But I think this whole pattern, if you can look at it, that's the neckline of Head and Shoulders. Well, I'll do it this one. This looks like a neckline of a Head and Shoulders bottom. There's the head right here. This is the left shoulder, and this is the right shoulder. Can you see that?
Yeah.
Yeah.
They got to balance those shoulders out, right? But yeah, no, I do it. I see it, man, for sure.
Right. Well, Head and Shoulders can actually have a higher right shoulder than a left shoulder. And if you go back to this one has a left shoulder lower than the right shoulder, but they're both Head and Shoulders bottoms. So we're screwing around with the right shoulder right now. So it's a gigantic right shoulder, goes back to 2016. So there's going to be some fireworks in the market. And so enjoy. All this is inflationary because commodity's going to go up. That's wheat. Food's going to go up. Everything's going to go up. We haven't broke out yet. I guess it could go sideways for a little bit longer. But if you look at SPY, or excuse me, not SPY, but GSG, you're already starting to build energy to the upside. We're pushing against the previous highs and higher volume. This thing's about ready to break out. Does it break out this month, next month? You know, it's pretty darn quick. You know, maybe January, I don't know. But it's not going to be months and months away. It's coming close.
We're here. I love it.
Yeah, we're here.
And yeah, crude, USO. I mean, it's remarkable. I was just, I was talking to friends a week ago. It's like crude prices. Man, a gallon of gas right now is around just under $3. A gallon of water at Publix is $2.49 for some of the water bottles. A gallon of water. Tim, thanks so much, man. Have a great week. We'll talk to you next Tuesday. Okay.
All right. Thanks a lot.
Thanks so much. Stay tuned, folks. Come right back.